Hello everyone and welcome to Fun with Fitzy. This is going to be the first of many videos in this course. The first few videos will be a review of grade 11. This video is on accounting basics and it is chapter 1, video 1. If you recall from grade 11, the accounting process involves identification, recording, communication, and analysis of economic events. Those are the 4 steps of the accounting process. In identification, it is up to you to identify and select economic transactions through source documents and then record them in step 2, which would be journalizing and then communicating them through preparing financial reports. Then the last step would be to analyze and interpret the results and provide feedback to the organization. There are both internal and external users of financial information. Internal users are those employees of the organization that would be interested in the accounting information to make decisions. For example, some of the questions they might ask are: is there enough cash to pay our bills? What is the cost of manufacturing each unit of product? So the cost would be, if you make pens, for example, how much does the ink cost? How much does the plastic or metal cost? How much does it cost to run the machine that makes it and pay the employees that are running the machine? How much does the shipping cost to get the raw materials in there? All of those costs going into it, down to each unit of product. Another question would be, can we afford to give employees pay raises? Probably a good question to answer before you go ahead and do that. Another question would be, which product line is most profitable? You have 2 lines making different products. Which one brings in the most profit to your company? And remember, profit is your price minus the cost. External users are the people who are outside the organization. So this could be investors or bankers, that sort of thing. They might be asking questions like, is the company earning satisfactory income? Is this a company I want to invest in? How does the company compare in size and profitability with its competitors? If I'm an investor and I'm comparing 2 different companies together, potentially I would want to invest in the most profitable one. Will the company be able to pay its debts as they come due? So if I'm a banker, I want to know that the company is going to be able to pay my money back. What is the difference between bookkeeping and accounting? Well, accounting is everything. It includes bookkeeping, and it includes much more. So the analysis and the information dissemination and advice that a person would provide to the organization would be done by the accountant. Bookkeeping, on the other hand, is just the recording of the economic events. So many people out there are bookkeepers that call themselves accountants, but basically they just record the transactions in the accounting software for the organization. But they basically stay away from all of that advice giving and decision making. It's just one part of accounting. Okay, there are 3 different types of accountants. There are public accountants, and these are the people who offer expertise to the general public. So companies out there who don't have accountants because they're smaller perhaps. So a public accountant would receive source documents from all of these companies and they would do the accounting for them. Private accountants are employees of individual companies and are involved in a number of activities including cost and tax accounting systems. They also do internal auditing and things like that. Smaller companies would have just one accountant doing all of those, whereas larger companies would have several different accountants, each responsible for a different task. And then there's not-for-profit accountants, and these people do the reporting and control for not-for-profit organizations like governments, foundations, hospitals, things like the Red Cross and World Vision. Those are not-for-profit organizations. Remember from grade 11, we talked a lot about ethics. Well, ethics are really, really important for an accountant. They are put in many ethical dilemmas often and need to be able to have a framework to determine what is the right thing to do. So ethics is the standard of conduct. And if you have an ethical dilemma, you need to recognize the situation and the ethical issues that are involved. Okay, you need to be able to identify and analyze all of those elements. Next, make a list of alternatives and weigh the pros and cons or the effects on all stakeholders. Once you do this, hopefully your decision is a little bit more clear. Probably not easy to make, but a little bit more clear, and then you will be able to decide on the direction you will be moving in. We'll be talking about ethics as we move forward in this course. Another thing that I want to remind you about from grade 11 accounting is GAAP versus IFRS. GAAP stands for Generally Accepted Accounting Principles. These are primarily established by the Canadian Institute of Chartered Accountants, so the CAs make the rules in Canada. Whereas IFRS stands for International Financial Reporting Standards. All Canadian publicly traded companies had to change as of January 1st, 2011. They had to change from GAAP to IFRS. And the reason why is because as the world becomes more globalized and companies trade globally, it is important for everyone to be using the same language. For example, everyone speaks English or everyone speaks French when they're doing business or whatever the language happens to be. In accounting, we call accounting the language of business, and so if everyone's using the same language, it's easier to understand. So IFRS is going to be the common language that accountants use. Lots of companies in Canada that are not publicly traded are still following GAAP. And we're going to be studying both in this course as we go through. Some gaps I want to remind you of from grade 11 are these. The cost principle. Remember that assets need to be recorded at their cost, what you paid for them. Okay? Cost is the value exchanged at the time something is acquired. And remember, acquired means purchased. Cost is used because it is both relevant and reliable. You can actually see, you can have a source document to back up that information, and it is clearly traceable and whatnot. So for example, if you buy a car that's for $12,000, but it's worth $20,000, you got a great deal on it, you're still going to record it at cost. Even though the asset may be worth more, cost is what we're going to use. GAAP has other assumptions. The going concern you remember from grade 11. As an accountant, you need to assume the organization will continue into the foreseeable future. The monetary unit, only transaction data that can be expressed in terms of money is included in the accounting records. So for example, if you hire somebody, you can't really put a monetary value to hiring someone, and so that is not an economic event until, of course, you pay that person. So sometimes things happen but are not recorded in the accounting records, and we will face a lot of those decisions as we go through this course, and we'll point them out too, when to include it and when not to include it. The business entity concept, or the economic entity, as it's called in this textbook, includes any organization or unit in society. Okay, so all economic entities should have some form of accounting. Here's a list, and I'm going to provide you with this table, but it compares on the left the Canadian GAAP, the Generally Accepted Accounting Principles, to the IFRS equivalent, so the International Financial Reporting Standards. So let's take a quick look at the third one down, the cost principle, because we just looked at it. If you look on the right-hand side, it says, in most circumstances, assets are recorded at the amount of cash or cash equivalents paid at the time of their acquisition. So very similar to the Canadian GAAP, the cost principle, and the IFRS equivalent is called measurement framework, paragraph 38. Okay, so just to let you know, we're going to be comparing, as we go through this course, the GAPs to the IFRS equivalents. And not much has changed at this level of accounting. In university, as you get to higher levels, you will be looking at more of the IFRS changes and how they affect the Canadian companies. Okay, so that's all the new information for now. So you should, by now, be able to explain what accounting is and the different types of accountants. You should be able to know the difference between bookkeeping and accounting, understand GAAP versus IFRS, and know the GAAP and IFRS principles and rules. And we'll be going through those as we go through the course. Thanks for watching. I hope this helped out, and we'll see you next time.